Hello everyone, welcome back to our channel.
On August 12, which was last Tuesday, I think, the RBA announced another interest rate cut, which is the third time we have seen this year after February and May.
Yes, and this brought the official rate cut to 3.6 because it was lower with another 0.25%.
Yes, so what does this mean for you?
Let's break down this topic and dive into the impacts of this decision.
That's a good question. I think there are a combination of reasons. First, the inflation. So the inflation has fallen significantly from its peak, which back to 2022, about 7.8%. But now in June quarter, the report shows inflation dropped back to 2.7%. They try to keep the inflation within the RBA 2% to 3%, the target range, and they are confident that the rising price finally are now under control.
Yes, that's right. Also, we can see a slowing economic growth. The economy has been a little bit slow to make progress. And the rate cut is one way of giving the economy a little boost, getting people spending and businesses investing again.
Beautiful. So the third one is about labor market. So the unemployment rate rose slightly in June quarter up to 4.3%. So they want to make sure the jobs market stays strong and also that unemployment doesn't start to climb.
Yes, that's right. And also global uncertainty. They also want to protect Australia economy from any shocks or instability happening in the global markets. So in short, they are happy with where the inflation is.
And they are now trying to focus on, supporting the economic growth and
keeping people in work.
Exactly.
The first and most immediate impact is a major boost to buyer confidence and borrowing power. When interest rates drop, your borrowing capacity goes up. For a typical Australian family with a mortgage, this could translate to $1,000 in extra borrowing power, making it easier to secure a home loan.
You are right, Karina. And we have already seen this play out in the market. Auction clearance rate has surged, particularly in major cities like Sydney and Melbourne.
Yes, that's right. And Brisbane led the smaller capital with 155 auctions and the preliminary clearance of 68.4, the rate. It was up from the previous week, which was 61.3.
So this renewed confidence is creating a sense of FOMO, which is referred to fear of missing out among the buyers. Well, it's cheaper to borrow. This is also heating up the competition and also putting pressure on prices.
That's right.
For sellers, this is a fantastic news. Increase the buyer's confidence and the competition means that a strong market for you. So many vendors now who were waiting on the sideline become feeling more confident, listing their properties, anticipating the strong interest and higher bids.
That's right. But we also notice this is particularly true for renovated family homes, which are currently seeing their fortune amplified by the current rate cut. However, properties in need of an upgrade might not see the same level of demand. It's clearly a sign that the market is rewarding properties that are ready to move into, as buyers are eager to act fast.
Exactly.
If you are already a homeowner with a variable rate mortgage, this rate cut is a welcome relief. Many banks are passing it on the full 0.25% reduction, which will lead to a drop in your monthly payments. For a typical homeowner, this can mean saving over $100 a month.
And interestingly, we are seeing a trend where many homeowners are choosing to keep the repayment the same despite the interest rate cut or not.
Okay, and why do you think is that?
Because by paying down their loan at the original higher rate, they can save tens of thousands of dollars in interest over the long run. For investors like us with the interest-only loans, you can either first use your extra saved money on the interest to pay off your existing loan faster and build equity in your investment portfolio, or you can save it up to use as a deposit for your next investment.
Yes, I guess it all comes down to whether you want to reduce debt on your current property or grow your portfolio and buy the next one.
Exactly. That's a good question. So currently, vacancy rate in many cities are sitting below or around 1%. Well, lower interest rate may bring more investors back into the market, boosting the rental stock. Demand from the tenants still remains very strong, than the supply.
Yes, right. And this imbalance is keeping rents high, particularly in inner city suburbs and regions that offer a quality lifestyle. Renters are unlikely to see relief unless investors' activity meaningfully increases.
Yeah. Well, it's definitely great news that it's easier to borrow, and also it gives the homeowner a break. But this is also a double-edged sword. All the new confidence is heating up the competition, and that's pushing the price higher.
That's right, and with the economists predicting more rate cuts on the way, these trends are only going to continue. Exactly. So if you are thinking of buying or selling, remember, this is a dynamic market, and having a smart, informed strategy is more important than ever.
Absolutely.
Thank you for tuning in. If you like today's topic, feel welcome to give us a thumbs up.
Share your thoughts in the comments below, and don't forget to subscribe so you won't miss out our next video.
See you next time.
See ya.
如果你对在布里斯班买卖物业或者出租房子有任何问题，可以到底下描述栏找到我们的社交媒体咨询哦，也可以预约免费15分钟的咨询，看看我们团队可以怎么帮到你。